Boy, that time flies when you're having fun, doesn't it? Time to get back to work, though, here tonight. Thursday evening, May the 7th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a jam-packed video in store for you tonight. As you can see in the background, the charts are all prepped up in the background. The oil, the S&P, and the gold. We got some big news coming tomorrow, and I want to make sure you are ready for those charts. Make sure we know where all the best setups are for tomorrow's Non-Farm Friday. And speaking of Non-Farm Friday, got some big news tomorrow morning. We've also got some stuff lingering under the surface. Fridays are always filled with unexpected things. Want to make sure we're ready for tomorrow's potentially unexpected moves by checking the calendar for tomorrow as well. So it's great to have you with me tonight. Glad to see you with me. Charts are all ready. I'm ready to rock and roll. Before we jump in tonight, though, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening on this newsletter. So subscribe, and don't forget, if you have any questions, drop those questions in the comments section below. And as always, if you tune in every evening to watch this video, how about a thumbs up tonight? If you guys rely on this video every evening to get ready for tomorrow, hit that thumbs up button for me. Always appreciate you guys showing the love on this nightly newsletter. But enough of the introduction. Let's get this party started. I want to kick off tonight's video with the calendar for tomorrow. Taking a look at the Econo Day calendar. Let's see what's happening on the schedule for tomorrow. Tomorrow is a Friday trading session. It's not just any Friday. It's Non-Farm Friday. This is one of the most busiest Friday sessions we have of the month, the first Friday of the month, as long, of course, as the first day of the month is in a Friday, which, of course, was last Friday. We have the Non-Farm Payroll Report. So big news tomorrow at 8:30 Eastern Time. The most important thing you want to be aware of when it comes to Non-Farm Fridays is, first of all, be careful overnight. Markets like gold will usually be pretty choppy, pretty grindy before that news number comes out tomorrow. So overnight session, if you're in Asia, if you're in London, right, if you're trading overnight, be careful. It's probably going to be a little bit lower volume. You got to remember, tomorrow's big jobs report, the big fish out there, the big elephants in these markets, they don't want to get caught on the wrong side of that news report tomorrow. So they'll be treading lightly here overnight. So we expect to see some low volume. Every once in a while we get a pretty active overnight session. So be aware, there's always potential for a pretty active overnight. But typically, ahead of that non-farm payroll, the employment number tomorrow morning, typically things will be relatively quiet. Now, of course, there's also the most important information after the news comes out tomorrow. After the number comes out tomorrow at 8:30, you want to be thinking two different types of movements. One is a very slow and sluggish reaction. The second one is a violent and very fast reaction. Those are the two most common responses you're going to see after the employment number. We very rarely see consistency in the market those 15 minutes after that news number comes out. So tomorrow at 8:30 Eastern Time, again, expect things to be a little bit sluggish and sloppy ahead of it. After it comes out, you'll probably either see the markets chopping around, going sideways, or you'll see them blast either up, right, or down, and things get pretty violent. My strategy on a non-farm Friday session is always to give it at least 10, maybe even 15 minutes. If it's stumbling around, looking like it's a drunken market, let it get its feet underneath it and figure out where it wants to go. If it really starts to race in one direction, those can sometimes be head fakes, and we want to give it 5, 10, 15 minutes to figure out what direction, update our channels or our ranges, and then go from there. So be careful overnight, and really be careful those 10 to 15 minutes that follow that non-farm number tomorrow. And again, if you're a gold trader, tomorrow is a day you've got to be careful on gold. Gold will typically be the most difficult to trade around that non-farm payroll on Friday morning. So knowing this, the big chunk of this market tomorrow morning is going to be eaten up by this news event. If I had to guess tomorrow, I would guess the best opportunities are probably going to come between 9:30 and about 10:45 Eastern Time tomorrow morning. It's a Friday. Remember, you've got to have a really good reason to be trading after 11 o'clock on a Friday morning. On a non-farm Friday, you're thinking probably 10:45. What's going to happen is that news report, keep in mind, a lot of traders, they don't even try to trade that stuff. They call the day off on Friday. They come back on Monday because next Monday is known as Reaction Monday. So don't waste all your bullets tomorrow. If the market's not moving quite right, if it's kind of, if it gets a bit fussy sometimes around these big news reports, don't force it. Wait for that news to come and go, right? Get the feet underneath it and then go from there. Don't force those trades tomorrow, though, because Reaction Monday, next Monday, right after Mother's Day, of course. Happy Mom's Day out there to all the moms on Sunday. On Monday is Reaction Monday. So save your bullets tomorrow. Don't waste them on bad trades. Save the ammunition, right? Keep the powder dry for Monday. If we don't see anything, you'll see some stuff tomorrow. We'll obviously see some good setups tomorrow, but don't force them because Monday's session is usually really, really good following that employment number. So be aware of that, right? Be aware of that. Early in, early out on Friday. Now, some major themes in the market as we go into tomorrow's session. We talked about this all week, the reopening of the economy. We've heard about Texas. We just heard from Michigan today. Michigan, one of the more popular kind of lockdown states, right? More people have been talking about that lately. Michigan announcing next week they'll reopen portions of their economy. So the reopening process is on everyone's minds right now. I just saw another headline out of the White House about more stimulus. You can tell they're starting to get creative with stimulus ideas, not just injecting more liquidity in the market, but you can tell they're starting to get creative there. We're going to hear something big here soon. We're going to see a headline about some new stimulus packages that I think are just right around the corner here. Don't forget, too, the blame game, right? We keep seeing this. Continues to be a theme in these markets right now, the blame games in the U.S. and China. Will that escalate tomorrow? Who knows, right? We definitely be paying attention. These are the big themes here for tomorrow, though. Big overnight. Again, sluggish in the overnight. Careful around 8:30, 9:30 till 10:45 tomorrow. That's where I'll be looking for the best setups. I hope I'll see you there with us tomorrow in the trade room. And, of course, the reopening of the economy. Will we get some more headlines there? Will we finally hear about the stimulus? And will that blame game, right now it's a bunch of fingers being pointed, but will we start seeing that escalate as we go into Friday? Remember, Fridays are there's usually a little surprise hidden inside of a Friday session, and with tomorrow being a non-farm Friday, I wouldn't be surprised myself if we get a little bit of a shock to the market tomorrow and get some nice big moves here. Now, don't forget, we're going to go over the plan tonight, but we trade the plan together every morning, 8 o'clock Eastern time in our trade room. I love to see you there with me. You got to be a member, and I'll put all the membership information for you guys and gals in the description of this YouTube video. So dig on down the description, find that membership link, and get registered and come trade with us every morning at the opening bell. Now that we know the schedule for tomorrow, we know some of the underpinning themes in the market tomorrow. Let's break this down now and open up the charts. We got the oil, we got the S&P, and of course we got the gold on the video here tonight. How about we jump into crude oil here first tonight, because there's been a lot of confusion over the last couple days here. We talked about the contract rollover confusion last night on the newsletter. As I'm recording this video right now, you'll notice we have officially rolled over ahead of time, and we don't see this very often. I'll tell you, I've never seen oil roll over this early. Usually oil rolls over by the 18th of the month. I've seen it roll over, 15th, 14th. I've seen that, but come on, the 7th day of the month, this is a very early rollover. And what's going to happen is a lot of your charting softwares are not going to have the ability to easily roll things over or roll the oil over before the 14th or the 15th. So what we did today in our trade room was we did a manual rollover from the 620 over to the 720. Now, you probably noticed that there wasn't a lot of volume in the markets early. You had to kind of wait for everybody to kind of realize what was going on. Today was a very good example of a market that was clearly confused by this volume shift. The bottom line is we do want to be trading on that 720 contract. It is substantially more volume. The problem is if you're on, for example, I'm on NinjaTrader right now, if you're on NinjaTrader, you're not going to be able to easily roll that contract forward before the 14th or the 15th of the month. So here's what I'll do. I'll put a link in the description of this YouTube video, and that will direct you to a video that NinjaTrader put out to show you how to, I believe it's edit or change the rollover date, right, for this contract. So I would anticipate if you're on NinjaTrader, or if you're on, another charting package, be aware you may not be able to easily go in and make that roll happen. There's some data issues in NinjaTrader. Not to worry though, in the description of this video, I'll put a little link to the NinjaTrader webpage where they go over how to fix that inside of NinjaTrader. I'm not a Thinkorswim user, right? So I can't help you there, but I'll definitely hope that if anybody else is watching right now, if you're on Thinkorswim or if you're on any other popular charting package, maybe you can show me some links down there in the comments section about how you can change those rollovers as well. So if you're on NinjaTrader like I am, check the link again in the description below, and I'll make sure I put that video there for you so you can fix yours as well and get your rollover done properly to the 0720 contract. So now that we know, kind of get the housekeeping issues out of the way here on oil, now let's get digging in here now, right, to this 0720 contract, the July contract, about 15 days before we usually see it. So what's the most important information? We still have this bullish market. We still have this little range in here holding strong, right? It's holding on for dear life. And as you can see, the momentum of this market swinging back and forth, up and down and up. I mean, just crazy. Now, I'm sure a lot of this extra volatility is coming from the fact that we haven't had a lot of volume in this market because they've been sharing volume, right? The volume has shifted early. So you've had, that situation where the 06 contract and the 07 contract have kind of been splitting up, all the volume, right? And that's been kind of dragging that volume down. And when you've got less volume, it's easier for the market to whip around, right? Take comparing the S&P to the NASDAQ, for example, right? The NASDAQ's an illiquid market. It whips around. The S&P is a very liquid market. It's not going to whip as much, right? So lower volume, probably the reason why this market's been a little bit more on the whippy side. Now, what we have right now is a bull market with a trading range. And of course, anytime I have a trading range, I want to buy low, I want to sell high, and I want to avoid the middle. Now, right now, you'll notice we have this big bear move down right now, right? Much like we saw in last night's newsletter. The big difference, though, is in last night's newsletter, we had already seen these bears try and fail twice, and momentum was already starting to move back in our direction. And as you remember, I talked about this last night, your best friend was that trend line, right? And that's exactly what happened, right? So if you watched last night's newsletter, we definitely were right on track, and hopefully you followed the plan, right, and made some money with it today. A little bit different now, right? Same idea. We've got that big bear move down. I want to be a buyer going back into that range right now, but I got to be patient. Right? I've got to wait for those bears to try a couple times before I can get this run going back up into that range. So really the most important information right now is once you get yourself rolled forward to that 0720 contract, then we want to be a buyer off of this low, right? I want to be a buyer off of this low, but I have a lot of concerns about momentum. Ideally, what I'd like to do is use this. Let me get rid of this little measured move here for us. Ideally, I'd like to use this new hidden channel and try to anticipate bears coming in, getting short off that channel so I can buy into those stop losses running back up into that trading range. Now, at the same time, I also want to be prepared for if this thing just snaps right back higher as well. That is definitely a possibility. And let's face it too, eventually this range may break down and the market may grind lower here. And so I do want to have a plan for that as well, because there's a big juicy trading range waiting down there at $21 a barrel, right? 22 half, 21, 20, right? That's a big old magnet down there. The bears would love to get down to that trading range. So I do want to be aware of those three very possible scenarios here. And remember, with tomorrow's non-farm payroll report, it may be quite slow here again overnight. Just promise me you're going to be careful here overnight, not force things here overnight. So what do we want to do here to be a seller on this, right? We know we're bearish right now, right? Actually, you know what? I'm sorry. Let's go buyers first. Excuse me. Let's go buyers first, and then we'll flip it around there for the sellers. Over on the buy side, as I would like to be a buyer going back up into that range, what I'm doing is I've got my channel, right? I've got this hidden channel off the lows. I like how the channel fits off of those lows. What I'd like to do is anticipate. I know I've got resistance coming down. I've also got a low, a high, and that creates my battle zone. I like how these two areas line up. Now, there's really a couple different opportunities as the market runs higher. I don't want to be too aggressive here once again because, again, we're so bearish right now. One pattern I'm watching for, because we know we're so bearish, is what I call a nested failure, right? So we go one try for the bears. I would imagine here coming off the top of that channel and looking for a second try here for the bears and buying it back up we go. I call this a nested failure pattern, right? 1, 2, I'll draw a trend line up off that low, right? Buying right off of that support trend line. I know we have the bears, right? I know we've got the bears very much in control momentum, but because we're at the low of this range, I want to buy this thing right back up into that trading range. And again, looking for what I call a nested failure pattern to accomplish that. Another pattern I'm watching for is a crown reversal. Let's say those bears come off the high of that channel with some more strength, right? Now they run up, they trap high, and they run back down again. I call these crown reversal patterns. Now this one looks very similar to that first pattern, but there's one big difference. It's not going to be the momentum's not going to be as bullish, right? The nested failure will go up, pull back, immediately go right back up again, right? It's not going to be as bearish here. You'll feel it pop higher. I'll draw that support trend line, and in this situation, right, I can look for that buy off of that trend line. 1 try, 2 try for the bears. If they get a lot more of a push though, right, off of that, again, off the battle zone area, now we go up, they try again. The bare minimum here would be a double bottom. I always like to get at least a little trap low on that. Very similar pattern, again, very similar here, you'll notice, but significantly different as far as the personality goes on that. We call those crown reversal patterns right off of the low. Another pattern I'm watching here as we go higher would be a clear strong move higher. If I can get that strong move higher, I don't want to trade the middle of this range. What's the best pattern to avoid buying high or selling low? It's a trap pattern. Looking for what I call a 2-try trap. Now these are very, very easy to see when they happen. It's a strong move up, a shallow pullback that barely touches the moving average, and of course that higher high is the giveaway. When that happens, hit it hard off of that trap low, right, as we run back to the other side of this trading range. That's called a 2-try trap pattern. Now, what else could we use here? What if they don't go 2-try trap? What if we go up, we pull back, and we jump? Now at this point, momentum is swinging hard, and the chances are very high they've got their sights on a retest of that 27.65. If I see this 1, 2, 3 reversal, now my job is pretty easy. Mark up the high, mark up that low, and buy off the low of that hidden channel. We call those 1, 2, 3 reversals into hidden channel pullbacks. So at this point, we've talked about a nested failure, right? The more aggressive move higher, 1 try, 2 try. The crown reversal, right? Little trap low there. One of my favorites, that 2-try trap before we go back up, and that 1, 2, 3 reversal as we go. Now, don't forget, we're going to trade these together every morning in our trade room. But if you're not a member or membership isn't quite right for you right now, at the very least, grab the free trading course. I'll put a link in the upper right-hand corner for you. Make sure you pause the video. I'll be here when you come back to join me. Grab that free trading course. Learn my favorite entry setups. Learn my favorite strategies. I'll show you hundreds of examples of how we apply our favorite strategies to our favorite futures markets. Grab that free course. And like I mentioned earlier, I'll put all the links for you guys in one spot underneath the video here tonight in the description of this video, especially that link to get the rollover done here on crude oil. Now, got the buy side covered. How do we trade the sell side? The sell side's not going to be as easy because of location. We're right down around the sweet spot here to be a buyer. We got the measured move hit. We're at major support, but they've definitely got they definitely have the momentum on their side. The bears certainly do have momentum on their back. Here's one way, right? Here's one way I'd like to be a seller here. One would be if we pop higher and we start pulling back. Now this, watch closely how I draw this. At this point, it's basically a nested failure with a trap high to be a seller. Now you got to be careful on this one. I really want that to be at least a double top, if not a trap. A trap would be ideal, but the key here is going to be get above the moving average, but the buyers struggle. Right? That's the difference. Remember, if the buyers take this, it's a reversal, right? But if we pop higher here, moving average comes over. Buyers try it once, right? Nothing there. Buyers try it twice. Now, again, I really want to make sure because of location, right, and because the situation we're in right now, I want to make sure I get that trap high to run it back down again. It's a nested, but it's a little bit more conservative because of the situation we're in right now, right? Double top, trap high ideal, right, for that two-try nested failure going back down. Also, too, I'm wondering, will this range down here, will that grab hold of this trend tomorrow? Will we start to run and grind and grind? If that's the case, I'm going to mark this up as a spike in channel. I'm still going to try to keep this big channel on here, but I would imagine it might start to break down, right? If it kind of, let me get rid of this real quickly here for us. If we start to, for example, kind of grind lower like this, right? We grinding lower. Now, I'm going to mark up that channel now and wait for a pop, right? The key is if it grinds lower, wait for the pop, wait for the buyers to come in and try to buy that pullback going in. It's not a bull market though. They've already voiced their opinion. It's a bear market. So if we start grinding lower, right? And again, it won't be a very strong move down. It'll kind of grind lower. Mark the low, mark the high. I'll start marking some of these swings up here. I want to get up into those areas. Give me a pop. Get above the moving average. Let those buyers try to buy the pullback. We know exactly where those buyer stops are now, right? And we can catch them trying to pick that bottom here with a buyer failure, right? Does that make sense? So again, this is if we keep grinding lower here on the oil. What else will work here right now? How about a 1, 2, 3 breakout? Yeah, I mean, that's the easy one. If we pull back to that moving average and these bears give us a good old whack, right? If they give it a whack going lower now, big strong breakdown here, mark up that low, mark up that high, and we're selling off the high of that hidden channel. We know where the target is, right? The target is back down into that 22.30, 22.21 area, that big juicy range that's waiting below. So at this point, I think we've got everything covered, right? We know how to get aggressive on the short side. We also know how to wait patiently for it. Most important thing, though, is I really hope we get that crown reversal. I would love to get a nice juicy crown reversal off of that low. But at the same time, if all we get is a two-try trap, well, that's what we're looking for here tomorrow. Let's keep going. In the meantime, though, grab that free course linked up in the upper right-hand corner. You'll love the free course. Let's keep this party going forward here. Over on the S&P. Now, thank goodness there's no rollover confusion. The price action itself today looked a bit drunk, right, ahead of tomorrow's non-farm payroll number, but at least there's no confusion as far as what contract month we're trading here on the S&P. Now, what do we know about the S&P right now? Most important thing from my point of view is a strong move up into what really was a spike in channel. right? And we talk about spiking channels. See how it spikes up and grinds. This is what the oil will do tomorrow on the way down, right? And we said earlier on the oil, spike down, grinds lower, right? That's what's happening. And see what happens when it pops back. You've got buyers waiting there to buy into those stops, right? That pattern right there is what you're looking for on the flip side of oil. So you'll notice what happened, right? The day begins pretty much in a spiking channel, but it ends very, very strange here. The fact that we didn't go all the way back to the beginning of that range. Remember, this is a big range from yesterday. Remember that? Remember, this is very similar yesterday. We had that big move down, 1, 2, back up, right? So you would have thought that with that range on there, I would have thought they go up, right? They try once, and we end up back down into that range. Not the case. So this is one of those situations where it's not what did happen, it's what didn't happen that I think is one of the most important clues here on this chart. And at first glance, yeah, it's a spiking channel, but look deeper, it's a range. It's a range. You can easily see the rotation. When you look at it a little bit differently here, you can see them rotating. They went up, they failed, came back in, right? And we're basically a bull market into a trading range. Now, I'm glad we mentioned the trading range, because anytime we have a range-bound market and we break above the range, we should rotate down to the low of pretty much the same amount. At the same time, you can see the triangle I've got drawn in, that triangle high, that triangle low. Do you see my notes here, right? What happened? There's no rotation. So we definitely have a range here. We're right at the top of the range. But what does that clue tell you? It's not what did happen. It's what didn't happen here. We didn't get the full rotation down. In my eyes, unless something drastic happens overnight, it's almost a gimme that we go right back up to retest that high now. There's a big bullseye now right at that 28.95. Again, when you've got these big triangles, you got these ranges, the market rotates back and forth and back and forth. What happened back here? They didn't get the rotation. Usually they will. Usually you'll get that rotation, the failure, and buy back up. And you can see there was some confusion there. A lot of folks are probably thinking, why aren't we getting this to go lower? It's because the bears aren't there anymore, at least not as many of them, and the bulls are obviously well equipped to defend this. It appears right now we're bullish. There's a very strong bull clue right now on the S&P, right? Regarding, of course, the lack of the return back to that range. Look at that. Right? That range middle's right there. Why didn't they get it? Along with the low of that triangle. So we're definitely bullish, but we're sitting right here at the top of that trading range. Now, we know direction. We know where the buyers are trying to go. They're ultimately trying to go back up to retest the high. And then remember, the amount of the move underneath the range is almost always going to end up at the amount of the move above the range. I've got big targets now. First one is up at that 28, what's that, 95. Second one up there at 29.06. So now we know what we're looking to accomplish here. The bears want to drop this thing back to the lows. The buyers are looking pretty good here right now for a run higher. Again, there's always going to be a little bit of an asterisk next to those statements because tomorrow's Non-Farm Friday. Anything can happen on a Non-Farm Friday. But as always, right, we look at the clues, we trade the reaction, and we do our best. Buyers, what can I do here? What can I do here to be a buyer? I think the most obvious one here now is a two-try trap. If we make a strong run higher now, watch for that shallow pullback. And remember, you've got some resistance up there. So I don't want to buy into resistance. I want to look for that two-try trap. Now, when it comes to my two-try traps, I always like to look for some sort of additional support level that I can combine it with. So we're watching those channels as we go, looking for the bears to come in, try once, try twice, two-try trap below that low, and again, see if I can combine it off a level of support. Another option would be a strong move up, a pullback to the moving average, and a blast through the high here. That's a pretty easy one. You'll notice we got a strong move up earlier, but they couldn't hold the pullback. Right? So we want to see if they can hold that pullback here. If they can hold that pullback, now grab that high, grab that low, and we're buying off the low of that channel. The only caveat to that is I don't want to take that buy off that low if they've already reached that pendulum swing high. What we may end up seeing tomorrow, if I get rid of some of these extra text on here, we may end up seeing it really rally higher, right? To try, trap, and pin right up to these highs. So if we do end up seeing the market start going, jump up, we'll look for those traps on the way up there. But, hey, it may snap higher there, and it may start going sideways. If it starts going sideways up there, what do? You buy underneath the trading range. So if we do happen to hop, skip, and jump our way higher here, and we start going sideways, once I start seeing double tops, double bottoms, I'm going to focus on buying underneath that range using what I call a seller failure pattern. We'll wait for the buyers to run out of bullets. We wait for that pull back below the range. We look for a seller to come in and sell off the moving average. Once we see those bears trying and failing, now we know exactly where their pain is. Now we know the stops are. We can buy right into those stop losses. Those are 3 setups I'm watching for here as we go higher here. Now, another option would be maybe we sit back inside the range again. Maybe we do get that run down, right? Maybe we do finally get that run down. This area is red hot down here. This area right here, you get the midline of that range. I have what I think to be the most important level for tomorrow. If they can get underneath this 28.61, I made the different color just for that reason. And then, of course, you got this trend line down here too, right? So this whole area down here, looking good for the buyers, right? A very tasty area for the bulls to snack on tomorrow. Now, if we can get that move lower, right? If we get that move lower, I'm looking for that seller failure off the moving average into a bull pullback off the EMA. One of my favorite setups below a range is a seller failure pattern into a bullish pullback pattern. Tomorrow is a news day. If we happen to get really smacked going lower, the news might come out. It may send a shock, right, going lower here. Remember, if the bears can grab it and hold it, that becomes a reversal. 1, 2, 3 reversal. I can grab the low, mark the high, and I can sell the high of that new channel, right? However, don't force it. If they pull back like this, remember, now with that bear momentum, we're still at the bottom of a range. The best pattern now, we just talked about this on crude oil, is that 1, is that 2, that buy back up, right? What do we call those? Nested failures. Buying that second try failure, or maybe a crown reversal, right? We go 1, we go 2, double bottom, trap low. These are all easy opportunities here, right? This crown reversal will take a little bit longer, right? But it won't be as bullish. You'll have to wait for it, and you're buying that trap low as it rips back up into that trading range. There are 2 more patterns there to watch for, actually 3 patterns there, right? One is that failure pattern into a pullback on a shallow move lower. The other, sorry about that. Didn't mean to white you out there. Right. Other one is a strong move down with a 1, a 2, a nested. Right. And of course the third one or fourth one, I lost count back there, is a 1, 2, right? Not as dramatic this time, right? Not as dramatic on the move higher here. Bears trying once, bears trying twice, trap low on it. And again, I'm just simply marking up all my ideas right now. I'm going through all of my if-then statements. I'll share all these and trade these with my clients every morning in our trade room. And again, like I said earlier, right, I'll put all that information for you for the free trading classes, the membership information. I'll put it down there in the description of this YouTube video. So now I think we have this all covered here now. We've got the buyers and the sellers. Also, I should also mention too, if we end up back around these highs, I can look for a crown reversal up there. Just make sure you're waiting patiently for it, right? That crown reversal will work to sell off that high up there. But, keep in mind, you're going against momentum, what I always tell my clients is you want to go quarter size, go one contract on those reversals, right? Go one contract. You don't want to go a full size position on those counter trend moves, right? I can go I'd be a lot more inclined to go more aggressive on a with trend move, right? Same pattern. I go full size off those lows, right? I'll go partial size doing it off of those highs. All right, guys, how am I doing so far? I know I'm going kind of quickly through this, but that's okay. My video courses, our trade room, I'll make sure we do it all the right way in our trade room every morning. But how am I doing so far? Any questions? Drop those questions again in the comment section below. How about a thumbs up for me here so far? Are you still watching? If you're still watching this far into the video, hashtag 1%. It's great to have with me here still. Always great to have you guys watching the entire video here with me because we got the best coming up here for last here on the gold. Thank you so much for sticking around with me here tonight. Over on the gold right now, what do we have on the gold? Again, no confusion here on rollover. What do we know about gold? First of all, we know tomorrow is Non-Farm Payroll Friday. Be careful, be careful, be careful on the gold. Hopefully I'm wrong. Hopefully I'm well wrong on that. Hopefully we get a good amount of volatility and volume overnight, and it's nice consistency tomorrow. But don't hold your breath. Gold does tend to be the most difficult on a non-farm Friday. What else do we know? We know we had that big range, right? We talked about last night on the newsletter. The bears couldn't hold, and it rips. Now this is one of those rips that is probably not going to come back into that range anytime soon. This is a very, very strong run higher here, and it looks like they've found themselves, inside of a new trading range. Now, there is a chance we may end up back inside that range, but tomorrow's a news day. Anything's possible, but I will be surprised. That is a very, very strong move here. And of course, with all of that bullishness, I want to be a buyer, and I want to be buying off a support level. So you'll notice here, I've marked up kind of those highs there. I think that's going to be the sweet spot here tomorrow. What is that? 16.6, right? That whole area there is as you can see, lots of bounces off that area. It might be a little bit higher. It might be a little bit lower. It's a bit ambiguous, if you will, around that area. But that 17.16, 17.50 area, that's a pretty hot spot as far as I'm concerned for buyers waiting. As I zoom in closer here on this, you'll notice I've also drawn in this channel off the highs. I really like how it fits off the low. And man, oh man, that would be the dream come true for the buyers tomorrow, right where that hidden channel low is, along with that reversal line at 17.16.6, right? Really nice spot there. Now, you'll also notice I've got my trading range. At this point, the range is very much an educated guess. It could easily get bigger or smaller in the next few hours, so we'll keep that posted for all of our clients. You'll notice too, I take the size of that range and my range expansions are right down in the same location. So there's no shortage of support to work with down around that 17.16, 17.15 area here. I don't want to trade the middle of this range, and I want to be aware if this range continues to build going sideways here, there will be that little bit of resistance area here overhead. Now, speaking of overhead, it's important that you understand where we are right now. There's a lot of tops up overhead here right now. As I zoom all the way out, you'll notice you could easily, like I mentioned last night, you could easily see there's a trend line coming down here, and we're going right into that trend line right now. I've got major tops up here, just lingering overhead. So be very careful being too aggressive as we go higher. We're going to really want to make sure we see confirmation if this market goes higher, and I want to buy aggressively as we are going higher. So be aware of where we are in the big picture here on the gold. All right, I think we've gone around the chart here enough. What's my plan? What I'd like to do is I'd like to see us again bounce off of that low. And this should be relatively simple. It really all depends on the type of pullback that we get on this, right? So do we pull back nice and shallow into that 716 area? If that's the case, I can look for for what should be a pretty reliable, right, seller failure into a bullish pullback combination. We see these combos all the time on these range environments where we wait for the price to pull back below the moving average. We wait for the sellers to try to sell that pullback, take it lower, and we're buying right into those stop losses. Another option, of course, now is once we pop higher, I don't want to buy it as it's going higher. I like to draw a trend line off that high, a trend line off that low, and oftentimes, right, that all comes together right at that sweet spot for a little pullback pattern off of that low. That is a seller failure into a bull pullback as we go back down. We see a lot of these patterns. I cover a lot of this inside that free course I keep mentioning, linked up in the upper right hand corner. Now, what if we really tumble, specifically down to that 1709, 1708 area? If we really tumble hard, again, tomorrow's Non-Farm Friday, we could easily see a shock to the system here. There are two patterns I'm watching for. One is going to be that 1, that 2, right? Remember that nested reversal or nested failure, 1 and 2, right? We're buying off that second attempt and slingshotting back up. Another one would be if it really cooks lower. This, of course, now much heavier the market will feel. It'll be 1 try. It'll be 2 try, right? We call those crown reversals. Again, kind of minimum would be that double bottom. Ideally, we'll trap low. Bears try once, bears try twice. And again, hopefully you can see the difference here, right? The nested has a lot more bullishness to it as it's going higher there. You're just waiting for the bears to kind of fully commit themselves and then buying into it from there. The crown reversal, it'll feel a lot heavier. It's not going to be as punchy as it moves higher there. The bears will obviously be very stingy trying to keep that thing going lower. I'm looking for that move down and then buying it as it snaps back up off of that low. That should be a really good buying opportunity. Now, what else can we do on this? What if the market keeps on going higher, right? What if the market keeps going higher here? A couple options here as we go higher. Just like we saw on oil, or just we talked about on oil, if the market keeps grinding, right? Keep grinding. That'll be a spike into a channel. Now, once you see a spike in channel, what's the secret? Remember, a spike in channel is confirming this move higher. That's what it's doing, right? The buyers are buying shallow pullbacks. Now, spike in channels have what's called the rule of 3, which means as long as you're in off the first couple lows, they're usually pretty reliable. Now, again, it's a news day, doing it overnight. I'm not sure how much I would trust that overnight. My best advice or my best setup on a spike in channel is to wait for that pop lower. That pop lower now, I'm looking now for that seller failure, right, and buying into those stops. This is usually where the best entry comes on a spike in channel. And it may not be that dramatically lower, you know what I mean? It may not be that much lower. It may be a relatively shallow pullback, right? And again, a seller failure off the moving average for that rip going higher, right? So use caution here overnight, buying the low, right? Save those bullets for that nice deep pullback, right, as we go. So I'd like to buy off the low of that channel, but if we keep on going higher, that works for me as well. I'm also watching too, what if we make a head fake at the highs? What if this thing rips up, goes down, chops up, and then comes right back down again? This might be an easy example of a 2-try trap. 1 try for the bears, 2 try for the bears, 2 try trap. So keep your eyes open for a head fake at that high. Because if we see it kind of shoot higher and then shoot back lower again, we've got that channel waiting right there. That is that strong move up, shallow pullback, higher high, trap low. That's that 2-try trap pattern that you probably hear me saying in your sleep right now because we talk about it so much on this newsletter. Hopefully not your nightmares, of course. So we know the 2-try trap with a fake out breakout to new highs. That's an option. It's also an option too, if we see this thing just rip higher here, right? That becomes a 1, 2, 3 breakout, mark up that high, mark up that low, right? This will definitely require us to have some good momentum, jumping here at the open, right? That'll be a pretty reliable setup, but you gotta see some strength, right, off the open here in Asia, going into London, right, coming off of those highs. Now, How about some sell side right now? Could I sell this market? Well, I would want to sell this. First of all, I've got this top up here, right up around that 1735. So if we were to go higher here and start 1 and start 2, right? What's that called? A crown reversal pattern, right? Buyers try once, buyers try twice, trap high, ideally a trap high. The other one, of course, would be a double top, right? Double tops are close enough, but traps are really the most reliable way to trade those reversals. That is going to be, again, you're going well against momentum now. You want to go quarter size, minimum size position on those counter trend moves, or maybe we do see a reversal. If we see a strong move down, a pullback to the moving average, and a jump off the EMA, if that's the case now, we're back to being bears now. Mark up that low, marking up that high, and we're selling off the high of that new hidden channel. Remember though, I'm not selling into a pullback here, right? On a pullback on this, I'm buying into a pullback. Right? A pullback is a pullback. It becomes a reversal once that pullback holds and jumps lower with that 1, 2, 3. That's why I call it a 1, 2, 3. It's 1, 2, 3. It's tough to mix that up, right? There's 3 legs to it. That confirms a reversal, and that will now give us the ability here to sell off of that high. So very, very good opportunities here on the gold. I really like that 1716 area. However, with tomorrow being a news day, we may have a pretty sloppy session tomorrow on the gold. So be careful, right? Save those bullets. Don't force those trades tomorrow because, again, reaction Monday, right, is, of course, on Monday. And, of course, as I mentioned before, a very big happy Mother's Day to all the moms out there. Don't forget to come out and join us tomorrow before Mother's Day, right? Join us every morning, Monday through Friday, 8 o'clock Eastern Time. I'll put all the membership information for you in the description of this video. I'll also toss in all the links for that NinjaTrader rollover video for you as well. Don't be afraid tonight to call me in the office if you guys have any questions. You can always use that live support tool on the right-hand side of the website. And as always, guys and gals, if membership in joining us in the trade room tomorrow is not a good fit for you right now, at the very least, grab that free trading course, learn our favorite setups, join the free trial. It's right there on the website. And again, I'll put all the links in the description of the YouTube video. That's all for me this week. No newsletter on Friday afternoons. That's right. You can get a little break from JJ on Friday afternoons. But I'm not going far, though. I'll always be here to help you guys out. So type those questions into the comment section below. Feel free to email me directly to jj@schooloftrade.com. And thank you so much for being here with me. Have a wonderful day tomorrow if we don't see you guys in the trade room. And as always, we'll see you guys on Monday evening for the next edition of our newsletter. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.